Bismillahir Rahmanir Rahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Alhamdulillah. Salatu wassalamu ala rasulihi nabiyil kareem wa ala alihi ashabihi ajmain. Amma ba'd. Thank you all of you for joining the session today. TAIF Digital Institute welcomes all of you. This session is specifically conducted on Islamic stock market on a special request from our students and in support with the university together, inshallah. Before I start the session, I will quickly introduce you to TAIF and some ground rules for this workshop. TAIF Digital Institute is created to lead the way through new age approach of training and awareness of Islamic finance. We believe Islamic finance is the way to move forward. We combine the technology with Islamic finance knowledge together and bring it to the masses of the Ummah, and we want to make Islamic finance commercially viable to everybody. Inshallah, before I invite my esteemed guests, Dr. Kamola and Dr. Basheer, inshallah, you will see both of them. I would say thank you for the students from Istanbul Sahabatin Zami University and their clubs, International Student Club and the Islamic Economics and Finance Club, who support and organize this event. Thank you for the interpreters as well. Inshallah, before keeping you waited, I will ask my first speaker, Dr. Kamola, to start today's session. Assalamu alaikum, Doctor.
Wa alaikum assalam wa rahmatullah. Brother Ahsan, thank you very much for your introduction. And I want to welcome all of our guests to this training, which is on Islamic stock markets. And we title it as everything you have to know about Islamic stock market. And within these 2 hours, we will try to do our best with my partner, Dr. Basheer, to cover the most important elements which you have to know about Islamic stock market. Can I start to share my screen?
Yes, Doctor. Yes, Doctor. You can continue starting.
I need to be able to share. I'm disabled now.
Yes, Doctor. Now you can, inshallah.
Okay. Well, Bismillahirrahmanirrahim. Again, assalamu alaikum everyone. Just to remind you, for Q&A session, we will have from 15 to 20 minutes at the end of the program. Meanwhile, you can send your questions to the chat. Well, I'm starting. The outline of our program, what we are going to cover in this program is, firstly, we will start with the primary Islamic stock market instruments. We will look at Sharia permissibility of equity market investments. Also, we will cover the screening of Sharia-compliant stocks, what type of screening methodologies we have, what kind of screening criteria we have. Then we will move to Islamic stock market indices, equity valuation, and issues in stock market from Islamic perspective. So the last 3 items will be covered by my partner today, Dr. Basheer Altarturi. The first 3 I will cover for you, inshallah. Bismillahirrahmanirrahim. Let us first start with the primary Islamic stock market instruments. When we talk about stock market, actually, what comes into our mind, of course, stocks or shares, right? So the primary Islamic stock market instruments are shares or the ownership rights of the companies. A share represents an undivided ownership in the capital of company. Shares can be classified into different types based on their features. So when we talk about the type of the shares, now we will cover 2 main types. Then there is one, it's more like, hybrid type of the shares, which I will also cover today. But the main 2 types of shares which you will see in the practices ordinary shares and preferred shares or preference stock. Ordinary shares or common stock are the simplest ownership instrument. They give the holder the right to vote on matters of corporate policy and composition of members of board of directors. Also, ordinary shares can be divided into voting and non-voting shares. Collectively, ordinary shareholders are the owners of the business or of the joint venture. Ordinary shares bear the full business risk of an investment up to their invested value, which means that the only risk you are exposed in or with ordinary shares is up to the amount you have invested. At the end, my colleague, Dr. Basheer, will also cover about the issues of stock market, for example, short selling of stocks. When maybe I will mention here why it is prohibited from now. When you are dealing in short selling with stock, actually you are selling borrowed stock and you are exposed not to the investment risk, not to the level of your investment, but to the level of your borrowings, which stipulates a high risk, and it is undesirable in Islamic finance. And also, ordinary shares bear the full business risk of an investment. Yeah, I also already mentioned it. And the last one is ordinary shares are accepted from the Sharia viewpoint. So we consider ordinary shares as Sharia-compliant instrument. How about the second type of the shares, which is preference shares? Preference shares are also known as a preferred share or preferred stock. Actually, when you look at stock market shares and stock they have same meaning. Just I'm mentioning this to the very, very beginners if there are some among us. What are the features of preferred shares and how they are different from the ordinary shares? First, preferred shares, they pay a fixed dividend and grant a priority over a common stock in the event of dividend payment or liquidation of the company. So by the name, they are preferred, they have kind of higher level of dealing. They have no voting rights. And from the investor's perspective, preferred shares or preference shares are more secure as an investment and source of income. So what is the source of income? You are receiving dividends. Now we will see what type of dividends you have. And also they are more secure because in the case the company is going for liquidation, the owner, the holder of the preferred stock or preference share will get paid first. From the issuer view, why issuers prefer preference shares? Because preferred share or preference shares might be issued if the firm doesn't wish to assume additional debt, doesn't want to dilute the voting right of the existing ordinary shareholders, and due to regulatory restrictions on voting rights applied to foreigner shareholders. Well, there are a few types of preferred shares or preference shares. First is cumulative preference shares. So cumulative preference share means that any dividend which is not paid on time will be paid in a cumulative way in coming years. Okay, so a type of preference share in which the dividends are cumulative, that is, if the dividend is not paid in a given financial year, it will accumulate for future payments in subsequent years. This is first type. We have to remember, because after that we will look at the Sharia resolutions about each of the type. Second, non-cumulative preference shares. This is a type of preference share with similar characteristics to a common stock, or ordinary shares, but the dividends are fixed and non-cumulative. Dividends will not accumulate if one or more payments are missed. Okay, this is the main difference between the cumulative and non-cumulative. The third part is redeemable preference shares. a type of preference share that can be redeemed into cash by selling back to the issuing company. I want to highlight here that you are selling your shares to the issuing company and not in the second market to other investors. And another important issue here that you can sell the redeemable preference shares after a pre-specified period at a pre-specified amount. Preference shares without the redemption value feature can be referred to as irredeemable preference shares. Okay. How about convertible preference shares? This is also interesting type of preference share, which is gives you right to convert your shares, your preference shares, which you are holding, into an ordinary share of the issuing company after a pre-specified period at a pre-specified rate. Okay, so maybe the company will give you right that you can convert your preference shares to the ordinary shares after 1 year and for fixed for predetermined rate. Now let's look at the issues and some resolutions. Like according to Islamic Fiqh Academy of IC and the IOF, the issuance of preference shares is not permitted. So there is no permission. And because they have special financial features which are leading to the granting or priority of these shares at the time of liquidation of the distribution of the profit. So there are two main reasons. They are prohibiting that it's kind of, you are getting the haq of the person who is also holder of the shares of this company, but ordinary shares. Priority in liquidations violates the principle that losses should be borne by partners in proportion to their capital contribution. Also, a fixed rate dividend could be interpreted as being tantamount to riba. So it's something similar to riba when you are promising your investors that you will pay a fixed amount of dividend every financial year. It is something like riba. But when you are sharing the profit from the company, when you promising to share the, the predetermined percentage of the profit, that one is acceptable because not always a company will make profit, right? Well, however, in practice, some Sharia authorities, including Sharia Advisory Committee of Security Commission of Malaysia, have approved the issuance of non-cumulative preference shares. Let me remind what was the difference between non-cumulative preference share and cumulative preference share. That in non-cumulative, if there is any outstanding dividend to be paid, it's not accumulated for the coming financial year. If it is missed, it's missed. If the payment is missed, then that's it. You are not going to receive it coming year. On the basis of tanazul, waiving claims on one's rights. So what Security Commission do in Malaysia, that they let companies to issue preference shares under the basis of tanazul. Let us see how it happens. I just want to give you example how it's implemented. The SAC of Security Commission, Sharia Advisory Council of Security Commission ruled that non-cumulative preference shares are permissible based on tanazul, where the right to profit of the ordinary shareholder willingly given to a preference shareholder. Tanazul is agreed upon at the AGM or annual general meeting of a company which decides to issue preference shares in an effort to raise new capital. As it agreed at the meeting to issue preference share at the annual general meeting where all shareholders are supposed to attend, the natural assumption is that the ordinary shareholders have also agreed to give priority to preference shareholders in dividing the profits in accordance with tanazul. So you are foregoing your right willingly under the tanazul concept. Okay, this is how it is possible to, if you want to issue preference shares. Again, I'm highlighting here, we are talking about non-cumulative preference shares. Well, there's another very interesting instrument. Actually, they, for the first two, they already issued as shares, but there is a very interesting instrument which we use especially in issuing perpetual sukuk structures, which we call quasi-equities or hybrid instruments. First, I want to show you how the example of the conventional financial system. Then we will move to the Islamic. So quasi-equities. Now I'm explaining from conventional side. Okay, quasi-equity is a form of investment that has attributes of both debt and equity. So how it happens? On maturity, this primary debt instrument, so it was issued as a bond. Okay, again, from perspective of conventional capital market, it was issued like a bond or debt instrument, can be redeemed for cash or converted into ordinary shares of the issuing entity or another designated entity at a pre-agreed rate. Okay, so example is like that. USD 1 million convertible bond. The company is issuing USD 1 million bond, which is convertible. May give a conversion option. Again, we're talking about option. It's giving you an option to convert upon maturity of the bond or upon reaching a pre-agreed time or upon occurrence of pre-agreed event on maturity of the bond at a conversion ratio. Let's say, for example, USD 100 to 1 ordinary share. The investor will receive 10,000 ordinary shares instead of USD 1 million cash. The decision of the investors whether to redeem for cash or convert into shares will depend on the conversion rate and the market price of the shares at the conversion date. So this is example for convertible bonds. However, let us now move to Islamic stock market. We have convertible sukuk and exchangeable sukuk. Okay. So when we're talking about quasi-equities, at the beginning in Islamic stock market, they are issued as in the form of sukuk, and then they will get feature of equity of stock. The difference, the idea is same, like with bond, the mechanism is same. The sukuk issuer is giving you the right option. Again, it's, you have just an option that either at the pre-agreed time in the future or at the redemption time of this of the sukuk, the termination date, or at the pre-agreed event, you have a right, you have an option to convert sukuk which you hold to the issuer company's ordinary shares. Okay, the first convertible sukuk was issued in 2006 by PCFC. PCFC is Dubai-based port operator. It stands for Ports, Customs and Free Zone Corporation. It offered the holders the option to convert up to 30% of their sukuk certificates into share. Okay, this is an example of the first convertible sukuk. Now, with exchangeable sukuk, actually you have same idea. However, in exchangeable sukuk, the issuer, mostly not a company, not an entity which is issuing also shares, but rather a government-owned entity. For example, Khazanah in Malaysia, and Khazanah was the first issuer of exchangeable sukuk. In exchangeable sukuk, this type of sukuk allows the holders to convert their sukuk certificates into shares of another company. Okay, for example, sukuk issued by Khazanah since 2008. Khazanah was the first issuer of exchangeable sukuk. Those are convertible into shares in companies held by Khazanah as opposed to Khazanah itself, because you cannot be shareholder of a government. Government entity doesn't have shares to issue to public, right? So the main difference between convertible and exchangeable sukuk, again, is that in convertible sukuk, you have right to convert your sukuk certificates into shares, ordinary shares of the issuer company. However, in exchangeable sukuk, you have right option to exchange your sukuk certificates to ordinary shares of companies which are in portfolio of the issuer entity, which is mainly government organization. Okay, so this is important. And these two types of sukuk, convertible and exchangeable, are very important, especially for Islamic banks to meet their tier 1 and tier 2 capital ratios. Okay. Well, how about Sharia permissibility of equity market investments? And let us look first at what is joint stock company. Joint stock company is a type of business entity involving 2 or more legal persons. Certificates of ownership or shares are issued by the company in return for each financial contribution, and the shareholders are free to transfer their ownership interest at any time by selling their shareholders to others. Actually, here we are highlighting the permissibility of the secondary market in trading stocks. Okay, so basically, from Islamic viewpoint, we are talking about musharaka when we are talking about this type of joint venture companies. Well, does Sharia recognize and accept the concept of present-day joint stock companies? According to the principles of Islamic finance, in the event of loss, musharaka partner must bear losses according to their respective capital contributions, right? Likewise, in the case of investment in a company, when a company wins up, the shareholders lose their invested money in the company shares. That is, which means bearing loss proportionate to their investment. And today, investing in stock markets well accepted as a permissible investment activity. Let us look at the resolution by IOFI, issuance of company stocks and permissibility by the IOFI. The issuance of shares is permitted if the objectives for which the corporation was established are Sharia compliant, or the business operations taken by the company are in line with Sharia principles. Thus, the objectives of its formation should not be transactions that are prohibited, like the manufacturing of liquor, trading in swine, or transactions in riba. If the objectives of the corporation are unlawful, the formation of the corporation is unlawful too, and consequently the issuance of shares that constitute such a corporation. So first of all, we have to make sure that company Sharia compliant. Today we will check also the screening methodologies, how we decide, how we give decisions that the company is Sharia compliant or not. And if the company is considered as Sharia compliant, then the stocks issued by this company or shares of this company are also Sharia compliant, so that they can be traded where in Islamic stock market. Permissibility of the secondary market trading. This is also a very big question, and actually without secondary market trading, we cannot talk about efficient stock market today, right? Tradability of shares in the secondary market is important to attract investors. Actually, they make shares liquid assets. Shareholders have to be free to transfer their ownership at any time, which makes this instrument, again, liquid instrument, by selling their shareholdings to others. Classical Islamic law encourages trading of tangible goods, but restrains the trading of financial rights. The classical view is that partnerships should be terminated and liquidated upon the withdrawal of death of a partner. Jurists have addressed this aspect by arguing that the rationale for the partnership termination requirement is for the determination of the partner's equitable share in the partnership. In the context of the present day trading of shares, the valuation techniques can satisfy these conditions. The valuation techniques will be covered in the second part by Dr. Basheer, thus achieving constructive liquidation for the selling shareholders. In practical terms, the prevailing market price of shares represents the equitable value of a partner's share in partnership. The majority of scholars have approved the secondary market trading of shares of contemporary perpetual life and limited liability companies. Actually, there are questions coming. Let me just check. Okay, this is general greetings. What are the essential characteristics of Islamic stocks? Now, we will move to this topic. How we consider that companies Sharia compliant. The business that is represented by Islamic equity instruments, i.e. Islamic shares, must be halal. So the company's business must be halal, must be in accordance with Sharia or Islamic law. The business must not be involved in prohibited activities such as gambling, sale of alcohol, businesses that involve riba and gharar. When we talk about gharar, of course, we are talking here about excessive gharar, okay? Because minor gharar, unfortunately, in most of the times, it's not avoidable. Well, how about companies whose primary business activities are halal, but the peripheral activities involve non-halal elements? This is a question asked by many, considering living today in a capitalistic world, or we are trying coexist, Islamic financial system trying to coexist together with the conventional financial system, which is not value-based compared to Islamic financial system, right? We have our values, all the transactions, all the businesses must be in compliance with Sharia, and we have all our prohibitions, what we have to haves and have-nots. Well, when it comes to this question, for example, let me give you an example. Let us say you are owning a company, like chain of shops which are selling product, and there is also one department which may be selling, but let's say alcohol, okay, or swine products. Considering the country you are residing in, maybe there are a lot of non-Muslim population, like so they also need to do some shoppings. So here the main measure is that the main activity, the majority of activity should be in halal business. So when we say talk about the main activity, is there any tangible ratio? Yes, we have tangible ratio, and today we are going to cover that. Screening of Sharia compliant stocks. So we have two types of screening. When we are screening a company before deciding if the company's business is Sharia compliant or not, i.e., so after that we will decide if the company's stocks are Sharia compliant or not. We will perform two screenings. First, we will go for sector screening. If company is successful in the sector screening, then only after that we will move to the financial screening. Okay, not the way around. What do we mean by sector screening? Sector screening, we have to analyze Sharia non-compliant business activities. So there are two approaches. The first approach says that there is sector code. Any involvement in Sharia non-compliant activity is not allowed. So it doesn't matter the quantity. The most important that the company in any way involved in Sharia non-compliant activities, and we consider this company as Sharia non-compliant. The second approach, which is mostly accepted and practiced approach, is 5% tolerance. What does it mean, 5% tolerance? It is as long as the core business activities of the company are Sharia compliant, then it is allowed up to 5% Sharia non-compliant income. Okay. So when you look at the whole income of the company, the income coming from or profit made from Sharia non-compliant business should not exceed 5% of overall profit or income of the company. This is a sector screening. Another one is financial screening. In financial screening, what we do after company is successful in sector screening, we go to financial screening and we examine financial aspects of the company. So we look at the liquid assets and interest-bearing securities, then leverage the ratio of interest-bearing debt. Okay, the ratio of interest-bearing debt. The Sharia Council, Sharia Advisory Council of Security Malaysia applies 5% benchmark for core Sharia non-compliant activities such as trading in alcohol or swine, so on, but applies a higher 20% tolerance level for some other activities. It's like hotel business, for example. Well, screening of Sharia compliant stocks. Now we are going to the sector screening, then we will look at the financial screening. Okay, I'm receiving some questions. For example, how if the company to invest still use conventional bank, is it count? This one I will explain. This goes for financial screening, and the ratio for financial screening is a bit higher than 5%. This one I will explain in coming slides, okay? The purpose of sector screening is to exclude from the universe of available stocks companies that operate businesses in violation of Sharia injunctions. In almost all cases, stocks of the companies whose primary business activities are in the following sectors would be rejected by Sharia sensitive investor. What are these sectors? First is conventional banking and finance, riba, stockbroking, or trading in non-Sharia approved securities, conventional insurance, which involves gharar and riba, gambling, gaming, casino operations, and number forecasting, mesir, production, trading, transporting, or storage of prohibited goods and services. It's not only production, but also storage of prohibited goods and services, such as pork, non-halal food, alcohol, and pornography, and also tobacco manufacturing or sale. So in addition to this, we have also entertainment, including cinema, music, and theme parks, hospitality and resorts, weapons and defense, so considered by some authorities as Sharia non-compliant investment sector. So those who are in purple take riba, because for riba we will have another calculation, which is financial screening, but for especially production, storage, transportation of Sharia non-compliant, or I will underline haram activities, is 5% for, but by some jurisdictions, for example, in Malaysia, others like for the hospitality and resort, you can increase the barrier to 20%. Okay. Well, now let us look how companies looking at different screening methodologies by different Islamic stock market players. First is DJIM indices, Dow Jones Islamic Market Indices. For example, first, riba, gharar, or maisir-based conventional financial services, banking, insurance, etc., casino, gambling, alcohol. When it comes to the manufacturing or trading of non-halal products, it is tobacco, pork-related products, entertainment and media, entertainment, cinema, pornography, music, etc., hotels and properties, hotels, and other activities such as weapons and defense. Okay, this is if you want to be listed, if your company wants to be listed in DJIM, then these are screening, sector screening the company will undergo. The second is FTSE Sharia Global Equity Index Series. When it comes to the riba, gharar, or maisir based or basic three prohibitions in Islamic finance, conventional, it's same. this previous, but now we have also one more. We have conventional financial services, banking, insurance, etc., and also we have casinos and gambling. Okay, and when it comes to the manufacturing or trading of non-halal products, it is alcohol, pork-related products, and non-halal food productions, packaging, and processing, or any other activity related to pork and non-halal food and tobacco. Entertainment and media, we have entertainment, which includes cinema, music, and pornography. Hotels are considered also part of Sharia non-compliant business, and weapons, arms, and defense manufacturing. Okay, so if you want to be listed in a FTSE, for example, then you have to know that if your company is involved into hotel business, it should not, the income you are receiving from that business should not be more than 5% of the total revenue of your company. Well, and then we have also S&P Sharia indices. Here we have under riba, harar, and maisir-based prohibitions, conventional banking, conventional insurance, interest income from conventional and gambling, production of non-halal products, alcohol, tobacco, pork, entertainment, advertising, and media, with some exceptions, and pornography. Hotels are not considered under this. So, for example, if your company, you want to be listed in Sharia stock market, and you are involved in hotel business, you have to know that, for example, to be listed under the S&P Sharia indices, your hotel business will not be included into the sector screening, right? Then we have also other activities like trading of gold and silver as cash on deferred basis, and also cloning. It's considered as non-halal activity, right? Well, can we get the slides, inshallah? Yes. Yeah, why not? Now let us move to the next slide. Sharia non-compliant income tolerance test. So here, for DGIM indices, what they do, they divide income from prohibited activities by the total revenue of the company, and it should be equal or less than 5%. So the company will be considered a Sharia compliant or Islamic company, can be listed in the Islamic Stock Exchange. FTSE Sharia global equity indexes, they said their methodology is same. When it comes to S&P Sharia index, what they do, first they take income from prohibited activities, they subtract interest income, and then they divide by the total revenue, and it should be, again, equal or less than 5%. Well, actually, this question coming from Mr. Gracindo, what are justifications to consider hotels as non-Sharia compliant business? Simply because hotels, how to say, there is a lot of uncertainty. You don't know what is happening there, which not in line with Sharia. But we have today halal tourism. We have hotels which have halal certificate, for example, halal tourism certificates, right? And actually, when we're talking about hotel business, it's this question, how to say, sometimes we say the answer is inside the question itself, right? So this is also one of that type of questions. Well, now, the determination of Sharia compliance status at the sector screening level. So now, when we look, for example, I will give you some possible scenarios how it's happening. Let's say we have XYZ company limited, has a conventional finance division. Okay, the revenue and profit before tax contributed by this division doesn't exceed 5% of the entire company's total revenue and profit before tax. The remaining 95% are from Sharia compliant sources. So after the screening, what we can say is the status of this company, it's Sharia compliant, it can proceed to financial screening. And justification for that is that both revenue and profit before tax doesn't exceed 5%. Okay, now it can go to the next stage, which is financial screening. Only after passing the financial screening, we can list the company share in Islamic stock market. Second example, we have ABC Limited, which is holding that has a wholly owned subsidiary involved in the hotel business. Revenue and profit before tax from that subsidiary comprises approximately 20% of the group's revenue and profit before tax. So we consider it Sharia compliant because proceeds to financial screening. It can proceed to financial screening. Both revenue and profit before tax doesn't exceed 20%. 20% again, according to some stock market indices. Like for example, in Malaysia, it is allowed to be 20%, not in every jurisdiction, by the way. Third example, DF Limited company has investment in accordance in associate company, okay, that operates a brewery which contributes about 8% of the company's total profit before tax. For this company, we will consider it as Sharia non-compliant. The business of the company is Sharia non-compliant because profit before tax exceeds 5%. GHI Limited company, has a subsidiary that is licensed distributor or tobacco products. While this subsidiary only contributes 5% of the company's total revenue, profit before tax from this subsidiary makes up about 15% of the company's profit before tax. Again, this company also considered as Sharia non-compliant because profit before tax is exceeding 5%. These are 4 examples. Then how about now we will move to the financial screening. After a company pass the first screening, then it will go to through the second screening, which is financial screening. The purpose of financial screening is to evaluate the extent of interest-based financing and interest-based income. After the sector screening, stocks are subjected to financial screening. There are 2 aspects that are examined in financial screening. First, the ratio of liquid assets, and second, the leverage of the company. Okay. Now we have another 4. Should the percentage of tolerance to be same for non-Islamic countries that are using Islamic windows? Depends where you are going to be listed. Okay, depends where your company is going to be listed. They will undergo the same screening methodology. It doesn't matter if the company is operating in Islamic country, in Muslim majority country, in Muslim minority country, but it should be under the same. Depends where you are going to be listed. For example, if you are going to be listed in PLCI, it's a different process. If you are going to be listed in DGIM, it's a bit different. The process will differ. Well, okay. There is other common things. Now, screening of Sharia compliant stock. We have first 3 ratios. Okay, first measurement, ratio 1, when you are dividing total interest-based debt of a company to the trailing 24 months average market capitalization. Second ratio is sum of cash and interest-bearing securities of a company divided by trailing 24 months average market capitalization. And third is interest-bearing accounts receivable divided by the market capitalization of a company. Where market capitalization is calculated as company's outstanding shares times to the current market price of each share. For a stock to be considered Sharia compliant, the above 3 ratios must not exceed 33%, 30% in some jurisdictions, but generally accepted 33%. Yeah. To look at your questions. Well, now we will look at the different rule books for the financial screening in various jurisdictions. Again, I will look at the DGIM indices. I will look at the FTSE Sharia Global Equity Index series, at the S&P Sharia Index, and also we will look at the Security Commission Malaysia's rule book. First, we will look at the liquid assets. So liquid assets, cash and interest-bearing securities. Cash and interest-bearing securities divided by trailing 24 months average market cap should be equal or less than 33%. With FTSE, cash and interest-bearing securities divided to total assets of the company should be less or equal to 33%. S&P Sharia indices says that cash and interest-bearing securities divided to 36 months average market capitalization. See, there is a general rule, but in practice, we will find slight differences in executing these standards. Should be equal or less than 32%, and for Malaysian Islamic stock market, cash divided to total assets should be less or equal to 33%. Cash only includes cash placed in conventional accounts and instruments, whereas cash placed in Islamic accounts and instruments is excluded from the calculation. Actually, the justification under this, there are a lot of criticisms which I received personally. How come, if we are talking about Islamic financial business, Islamic finance, we shouldn't tolerate even 1%, but considering, again, in the world where especially in Muslim majority countries where we have two financial systems in line, conventional Islamic, we have to understand that Islamic financial system is should coexist with the interest-based system. And if we do not have this type of criteria, if we don't allow companies some level, especially in financial screening, then we will not have the Islamic stock market at all. And what will happen? Another question will arise, like, so what will happen if we don't have Islamic stock market? Then we will not have, we cannot provide alternative to the investors who want to support, because by investing in one company's stock, you are supporting the company's growth, right? So we will not give rights to the investor alternative like Sharia-compliant investment instrument, and also we will kind of limit the companies from growing. So this all comes under the maslaha mursala, the public good. Well, another screening of financial screening when it comes to the liquid assets, accounts receivable. According to Dow Jones Islamic Market Indices, accounts receivable divided to trading 24 months average market cap should be equal or less 33%. According to FTSE Sharia Global Equity Indices series, accounts receivable and cash divided to total assets should be less or equal to 50%. See, for example, FTSE has a higher tolerance ratio. S&P Sharia Index says that according accounts receivable divided by 36 months average market capitalization should be less or equal to 49%. In Malaysia, there is no such a screening. And when it comes to the leverage, the third ratio is leverage, total debt divided to trading 24 months average of market cap should be equal or less than 33%. This is for DGIM. For FTSE, debt divided by total assets should be equal or less than 33%. S&P Sharia, we have same, but they are dividing debt to the 36 months average market capitalization. And for Security Commission of Malaysia, it is debt, again, divided by total assets should be less or equal to 33%. Debt only includes interest-bearing debt, not sukuk, by the way, okay? We cannot put sukuk under this screening because sukuk is Sharia-compliant investment instrument. It's not debt. you are investing into the underlying asset of the sukuk. Well, this is different rule books. When it comes to Islamic stock market indices, now I will invite my colleague, Dr. Basheer Altarturi, to continue, but let me also look at this is common. Yes, Dr. Basheer, the floor is yours.
Yeah, thank you so much, Dr. Kamola. Can I share my screen?
Sorry, let me stop.
Yes, it will be the same slide, but so I will control. Again, I would like to thank Dr. Kamola for her presentation. Inshallah, I will start on the indices, Islamic capital market indices, and the evaluation part. Well, okay. Like any other stock market indices, Islamic stock market indices serve few rules. The first one is to measure overall performance of an equity market. The second is to perform as a benchmark of an assets or fund manager. And of course, indices in general are often used to directly in certain investment instruments such as index-linked unit trust funds or mutual funds or exchange-traded funds. So almost it's the same as the conventional, the purpose of Islamic stock market indices, the same with the conventional market. Now, in terms of how we calculate these indices, there is a few methods. First one is by having market capitalization weighting. In this methodology, the share with higher market capitalization will have, of course, a greater impact at the end. And price weighting, particular stock weighting in the index is solely determined by its price. In equal weighting, each stock that makes up the index will have the same weighting regardless its size or price, like regardless the market capitalization or regardless the price. Last, we have the capped or customized weighting, that there is some variation of the above types, may feature capping of weighting so as not to exceed a certain percentage, and may also include volume of trade as a variable to determine weighting. Now, let's talk about equity valuation. In Islamic finance in general, in the modern economy, it's still in its fancy, as Dr. Kamola also mentioned. So much of the valuation is still based of valuation. But the main thing here that as long as security can be declared Sharia compliant through some kind of Sharia screening that Dr. Kamola mentioned, so there is present no distinct way of valuing them which can be claimed as Sharia based way. So we will talk about Sharia valuation. Oh, sorry, I mean equity valuation in general. As I said, it will be almost the same with the conventional market. So what drives stock value? many factors actually comes into play, including how much profit the company earns, how its new products fare in the marketplace, the overall state of the economy. There is actually, but what matters actually here, it's what the investors believe about the company's future. So we will mention about this obtaining standard of performance. Now, obtaining an estimate of stock intrinsic value that investor can act on, it's the underlying purpose of the stock valuation. So investor can decide whether and to what extent actually stock is under or overvalued by comparing its current price to its intrinsic value. At any time, the price of stock depends on investors' expectation about the company's future performance. So when the outlook of the company improves, or its stock price, usually the stock price will probably go up. If investors' expectations become less rosy, then in this case, the price of this stock will probably go down. So as we said, there is several aspects of security analysis, including macroeconomic factors, industry factors, company-specific factors. But as we said, for stock valuation, the future matters more than the past. Primary reason for the looking at past performance is to gain insight about the firm's future direction. Although past performance doesn't provide any guarantee about what the futures hold, it can at least gives us a good idea of the company's strength and weaknesses. For example, history can tell us how well the company's products have done in the marketplace and how management tends to respond to difficult situations. So the past can reveal actually how well the company is positioned to take advantage of things that may occur in the future. Because of the value of stock depends on the company's future performance, as we said. So investors actually use historical data to forecast key financial variables. In this way, like investor in general, they can judge whether the stock market price aligns with the company's prospects. One of the way that we do predicting the future performance is forecast sales and profit. The key to the forecast is, of course, the company's future performance. And the most important aspect to consider in this regard are the outlook for sales and profit. So one of the ways to develop sales forecast is to assume that company will continue to perform as it has in the past and simply extend the historical trend. Of course, if there is some evidence about the economy or industry or company in general that hints at faster or slower rate of growth, an investor would want to adjust the forecast accordingly. Often we call this naive approach, and this actually naive approach will be about as effective as more complex technique. Once they have produced a sales forecast, investors actually shift their attention to the profit margin. And we can see actually they want to know what profit the firm will earn on the sale that it achieves. One of the best way of doing is to use common size income statement, which takes every entry found on the ordinary income statement or balance sheet and converts to a percentage. To create a common size income statement, we basically divide every item on this statement by sales. For example, now we will see here an example for how we make a common size for income statement. So we can see here a dollar-based and common size income statement for one company called Universal Office Furnishings. To understand how to construct these statements, let's use the gross profit margin, which is 41.8% as illustration. In this case, divide the gross operating profit of 809.5 million by sales, which is 1,938 million. So we will have a 41.8%. So once we use the same procedure for every other entry of the income statement, we can get the same result. Of course, we can common size statement. It's the same, like it's the adds up, just like the dollar-based counterpart. For example, sales of 100% minus cost of goods sold, which is 58.2% equals to of the gross profit margin, which is 41.8%. And we can also use on total assets the same way on as we do in the income statement with common size balance sheet. Security analysts and investors use common size income statement to compare operating results one with the next. The common size format helps actually investors identifying changes in profit margin and highlight the possible causes of those changes. For example, common size income statement can quickly reveal whether if there is a decline in firm's net profit margin is caused by a reduction in the gross profit margin or a rise in other expenses. So all these things that we can get easily by tools. And that information actually helps analysts make a projection of a future profit. Analysts might use most of recent common size statement or perhaps an average of statements that have prevailed for the past few years, combined with the sales forecast to create forecasted income statement a year or two ahead. So analysts can make actually adjustment to specific items to sharpen their projections. For example, if analysts know that a firm has accumulated an unusually large amount of inventory this year, so they might suspect that the firm will cut prices next year to reduce its inventory holding. That will put downward pressure on profit margin. In this case, adjustments like this, actually, we hope at least to improve the accuracy of forecast of profits. Given a sales forecast and estimate of the future net profit margin, we can combine these two these two pieces of information to arrive at future earnings or profit. So we can see that future after-tax earning in year T is equal to estimated sales in year T times by the net profit margin expected in the year T. The year T notation simply denotes to the future calendar or fiscal year. Like, let's suppose that in the year just completed, a company reported sales with 100 million USD. Based on the company's past growth rate and on the industry trends, we may estimate that revenue will grow at 8% annual rate. Of course, we may think that the net profit margin will be about around 6%. So the forecast for next year's sales is will be around 108 million, 100 million times 1.08. So next year's profit will be 6.5 million. So using the same process, investor actually could forecast sales and earnings beyond 1 year. Okay, now we talk about the forecast. So using the we talk about the forecast for this company, Universal Office Furnishing. So using this same information obtained from this company, we can illustrate the forecast procedure we just mentioned. So here, let's assume that an investor consider Universal Common Stock has a 3-year investment horizon. Perhaps the investor believes, based on earlier, of course, studies of economic and industry factors, that the economy and the market for office equipment stock will start running out of steam near the end, let's say 2022 or early 2023. So we assume that. So regardless of the reason behind investors' 3-year horizon, we will focus on estimating universal performance for 2020, 2021, and 2022. Now we can see in this table selected 5 years, which is historical financial data for the company, and forms the basis. This year will form basis for our forecast. The data revealed that the company has been constantly profitable while growing for the past 4 years. The essential elements actually here of the financial forecast for 2020 through 2022, we can see it in the following table. So the key assumption for the reasoning behind them are as follows. Maybe, like, for example, for net profit margin, various published industry and company respect reports, for example, a comfortable improvement in earnings. So as an investor, we decide to use a profit margin of 8% in 2020. And then we project even better profit margin in 2021, which is 8.5%, and 2022. So Universal implements some cost improvements. For common shares outstanding, maybe we believe that the company will continue to pursue its share buyback program, but at maybe lower or slower pace than in as we see in 2016 to 2019. So from from a current level of 61.8 million shares, then as investor, maybe we project that the number of shares outstanding will drop to 1.5 million in 2020 to 60.5 million in 2021, and then to 59 million in 2022. So these kind of a projection, maybe the investor can predict or forecast. For payout ratio, investor may assume that the dividend payout ratio will hold at steady 6%, and PA ratio, primary on the basis of expectation for improved growth in revenues and earning. Investor may project PA multiple that will rise for its present level of 18.4 times earning to roughly 20 times earning in 2020. Although this is a fairly conservative increase in the PE actually, when it's coupled with the hefty growth in earning per share. So the sequence involved in arriving at forecast dividends and the share price behavior, that is, we can maybe consider one, the company dimension of the forecast come first, including, of course, sales estimates, net profit margin, net earnings, and number of common shares outstanding. The second, maybe we'll consider earning per share equals expected earning divided by shares outstanding. Then the bottom line of the forecast is, of course, as we see, the dividends and capital gains expected from universal stock based on the assumption about sales, profit margin, earnings per share, and so on, as we can see actually in the table here. So investors actually employ several stock valuation models, although they are usually aimed at
It seems
Yeah, I think there's some connection problem with Dr. Basheer.
is back.
sorry, I got a problem with the connection.
No problem.
All right. Things I know.
Yeah, you can continue, Doctor.
All right. Thing to share my slides. Okay. So as we said, like we have actually some models focus on the dividend that stock will pay, and others will focus on cash flow that a firm generates. But there is also other stock valuation model in use, like model that employ such variable as dividend yield, multiples, relative price performance over time, and even company size or market capitalization. All these they may use it as key elements to the decision-making process. For the purpose of our training here, we will focus on several stock valuation models that drive value from fundamental performance of the company. First, we will look at the model that been dividends. The intrinsic value of almost any investment, not just a stock, any investment actually equal to the present value of its expected cash benefits. So for common stock or for stocks, since we are talking about stock market, this amount, the intrinsic value, actually consider the cash dividends plus the stock's future sales price. One way to view the cash flow benefits from common stock is to treat the dividend as infinity lived cash flow stream. Why we do this infinity lived cash flow stream? Because we have this assumption, the going concern. So this assumption justified this base of view. So from this perspective, actually, the value of a stock equals to the present value of all its expected future dividends over an infinite horizon. When investors sell stock, what they really selling is the right to all future dividends that the buyer will get. In this framework, actually, and in this perspective, price stock will rise or fall as the outlook for dividends and of course required return. So we will see the outlook of dividends and required return changes. So these the future price of the stock will be depends on these. Of course, this approach, which holds that the value of stock depends on its future dividends, we call it as dividend valuation model. In this model, we have three versions of dividend valuation model, each based on a different assumption about the future rate of growth in dividends. The first one we consider there is zero growth model. Like we assume that dividends will not grow. The second model, we assume actually that dividends will grow by a constant rate. So we call it a constant growth model. And lastly, it's the variable growth model, where we assume that the rate of growth in dividend will vary from year to year. So zero growth model. It's the simplest version of the dividend valuation model. Why? Because assume that stock pays fixed dividend stream. Dividends stay the same year in and year out. And like the expected, we will have the same in the future. So there's no growth. So under this assumption, the value of the stock is simply the present value of its annual dividends. So to find the present value of annual dividends, what we do actually, simply we divide annual dividends by the required return. Of course, most companies that dividends gradually increase them over time. So it's unusual actually to find a common stock to which zero dividend growth assumption might reason apply. However, for example, Dr. Kamola mentioned about the, for example, preferred stock. So other investment, they fit have assumption quite well with this constant growth like preferred stock. But as what Dr. Kamola mentioned, the permissibility of preferred stock, and there's certain condition to consider this preferred stock is permissible or no. So this actually zero growth, it's suited for preferred stock because their dividends actually never changed. The second model is a constant growth, which is another version of dividend valuation model, assumes that the dividend grow at a constant rate. So in this version, stock value is still dependent on future dividends. But such dividends grow forever at a constant rate, which we consider it G. We can see the value of share of stock is equal to next year's dividends divided by required rate of return minus the dividend growth rate. So even though this model actually assumes that the dividends grow at a constant rate forever, I mean, it's better than zero growth rate, but that actually doesn't mean the investor must hold that stock forever. Actually, indeed, the dividend like evaluation model makes no assumption about how long the investor owns the stock, and we have actually terms of the holding period. So with the constant growth of dividend valuation model, it's irrelevant whether the investor has a 1 year, 5 year, or 10 years holding period. So the stock value actually it will be the same under all these, like let's say 1 year or 5 year or 10 years, as long as the input assumption, which is we have in our equation, the R, which is the required rate of return on the stock, G is the annual rate growth, and D1, the annual dividend expected next year. If these inputs are the same, then the value actually of the stock will be the same regardless of the intended holding period. So we can see analysts actually sometimes like use this constant growth dividend valuation model to estimate the required return on this stock based on the assumption that stocks market is equally to intrinsic value. But we can see actually here, even though constant growth model is improvement of the zero growth model, but still has some shortcomings. So this is why there is a third way of stock valuation, which is variable growth and dividend valuation model. So the most obvious deficiency is that the model does allow for the changes is expected growth rate in the constant growth model. To overcome this, we have the variable growth rate. Essentially, the variable growth dividend valuation model calculates its price into two stages. As we can see here, the value of share of stock it's equal to present value of future dividends during the initial variable growth period plus the present value of the price of the stock at the end of the variable growth period. Maybe we think of this equation, it's like difficult, but actually it's a lot easier than it looks. There is actually 5 steps we have to do to do this calculation. These steps are: first, we have to estimate annual dividends during the initial variable growth period, and then specify the constant rate, the G, at which dividends will grow after the initial period. After that, we will find the present value of the dividends expected during the initial variable growth period. Then the third step, we use the constant growth of dividend valuation model, find the price of stock at the end of initial growth period. After that, we find the present value of the price of the stock, as we just mentioned in step 3. And of course, the price of the stock is discounted for the same length of the time as last dividend payment in the initial growth period, because what we have is being priced, like in step 3, at the end of the initial period. So lastly, we add 2 present value component in step 2 and in step 4 to find the value of stock. Things with example will be clear more. For example, we have Sweetmore Stock, a company. And we have this example. So first, as we said, first step, what we have to do actually is to project the annual or forecast the annual dividends. So the most recent dividends here in our example is 2018. It's 2.21 cents. So future dividends, we estimate annual rate of growth in dividends G for like we have here 2019, 2020, 2021. So for 2022, we like beyond 3%. Then in second step, we present value of dividends using the required rate of return. In our example, we use, for example, 11% during the initial variable growth period. So we can see here year dividends and present value. So the total we have present value is 7.43. We say we will add this present value in step 2 with present value in step 4. So this is, we need it later on, $7.43. So the step 3 is price of the stock at the end of the initial growth period. So we have at the end of initial growth period, it's D 2022. So what's equal actually D 2022? It's equal D 2021 times 1 minus G, the growth rate, divided by required rate of return minus the G growth rate. So we have 3.48 times 1.03 divided by 11% minus 3%. So the total we have 44.81 cents. So this is now we use this in step 3 to discount the price of stock and by 11%, which is $32.76. And now we will sum up the amount that we got in step 2 plus the amount we got in step 4, which is 40.19 cents. So the present value of initial dividend stream in step 2, we added to the present value of the price of stock at the end of the initial growth period in what we see here, step 4. So what we predict, the value of Sweetmore stock actually, it's equal to $40.20 or 19 cents. This is, as we mentioned, actually, we have dividends valuation model, and we have other actually approaches to stock valuation. Other approaches that we have, it's free cash flow to equity method, or what we call it flow to equity method. This method estimates cash flow that a firm generates for common stockholders, whether it pays those out dividends or not. As we say, like maybe these cash flows will be reserved. And we have the PE approach, which build the stock valuation process around the stock price to earning ratio. So major advantages is that these approaches don't rely on dividends, as we just see in the other examples. So as we said, this valuation, it's the same as conventional methods, since we said it's all the Islamic stock market, we almost use the same with the conventional stock market, since we don't have the what we call it the Sharia way or Sharia-based way for the calculation. So it's almost the same with the conventional stock valuation. Lastly, actually, there is certain issues in stock market. Of course, this is an introductory training about Islamic stock market. There is many issues, and every issues there is many discussion in terms of every single issues. But here we would like to simplify what we have. For example, here we'll talk briefly about speculation, market trading, short selling, etc. First of all, we would like to actually clarify the differences between trading, which is it's permissible in Quran. Allah said, وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى, which is the trading is part of bay'a. So we would like to see some kind of a comparison between here the trading and gambling, which is it's prohibited. Gambling, it's prohibited in Islam. So first, in terms of underlying assets, for share trading, regardless of share price movement, actually there is almost always an underlying assets. However, in gambling, actually there is no underlying assets. If in terms of origin of risk, we may see that risk is reflected in the market operation, but in gambling, actually risk is created and built into the contract, and this is the difference of gambling. For share trading, like the primary determinant of financial outcome is the free market of demand and supply, the interaction between demand and supply. So this is the determinant. The price will be how the demanders and suppliers interact in the market. However, in gambling, actually, there is a random event and there is kind of uncertainty and so on. We have also gain and loss distribution. For share trading, in general trading, actually, in the long run, or as we can say, the aggregate at the aggregate level, we have net gain. However, in gambling, actually, there is always zero sum game. So, in terms of like I said, short selling, we can see actually most of scholars they consider they forbid the short selling. Because why they forbid it? Because short seller borrows rather than owns the stock shorted, so it's not permissible in Islam. We have many scholars actually discuss about this. And for example, margin trading, we like we can see actually margin trade is one of the activities prohibited by the majority also of Islamic scholars. The reason why the prohibited is being it's involved borrowing fund as well to invest, and the lender of the fund charges interest. Also, on top of that, actually, losses can be greater than the amount borrowed, because margin trading actually provide the risk of investors increasing as percentage of this, or what we call the leverage increases. So all these reasons, like majority of Islamic scholars prohibit also margin trading. So this is as an overview of Islamic stock market, and we can maybe now open the floor for Q&A.
Assalamu alaikum, doctor.
Walaikum salam.
Dr. Kamola. Doctor, next slide.
Okay, we actually almost this is the
Finished.
last
All
slide.
right.
Yeah.
Okay. Thank you very much.
We actually the issues, because the issues is really it's need one session actually, just talking about the issues, because it's the current issues and there's many discussions. So we try to like simplify it.
Inshallah. All right. Thank you, doctor. No problem. Inshallah.
Then I think we can take care of some of the questions.
Yeah, sure.
Hassan, you want to go through or you want me to help you?
Okay, maybe we go through. Actually, I tried to answer a few questions by writing. I don't know if everyone can see the answer or only the person who asked can view the answer.
No, I think everybody can see all the questions.
Very good. Very good. Okay, first question coming from Muhammad Wahid Azam, who is asking, I have a question about Bitcoin. Spot trading is legal according to Islamic point of view. Actually, Bitcoins themselves, there are still no united view about not even investment in Bitcoin. Okay, so this question, I will not say anything because according to some scholars, due to excessive gharar, which is fluctuation in prices of Bitcoin, it is not permissible. But if you don't look at the Bitcoin itself, but if you look at cryptocurrencies, there are some approved from Sharia viewpoint cryptocurrencies, which are cryptocurrencies with underlying real asset, like gold, for example. Okay, this is for the first question. But
okay, sorry, just so I would like to add one thing. Sorry, Dr. Kamola. As the question here, like there is two things, as what said Dr. Kamola. Actually, Bitcoin is something, spot trading, and another thing. We don't have problem with spot trading. The hadith mentioned in the asnaf, 6 asnaf at the end, so which is yadan biyad, which is spot trading. So actually, the problem, as what just mentioned here by Dr. Kamola, is the excessive gharar. Yeah, sorry.
Thank you. Yeah, it's about spot trading, or actually, when it comes to SAF, it should be on spot. And also another question about cryptocurrencies in general. There is no united view about, is it currency, even though we call them cryptocurrencies, is it currency or is it commodity? So it is also something need to be
Exactly.
There is no united view on that. Okay, so this is for the first question. I'm moving to the second question from Dr. Abdullahi Shuaib. Assalamu alaikum wa alaikum assalam. Aside for the SACSC of Malaysia that approves the permissibility of non-cumulative preference shares, please, is there any other country that holds the Sharia practice? Personally, I am not aware of any other country. I will pass to Dr. Basheer.
Well, okay, of course, Malaysia is considered one of the most advanced countries in Islamic finance, and also the kind of regulation about Islamic finance, Islamic stock markets, Islamic banking in general. So this is why we like Dr. Kamola mention or talk about the Malaysian market. But there is actually kind of now it's like GCC countries, especially in the UAE, they have now trying to develop a new this Sharia practice as well. And also we have like in Turkey, but still doesn't compare as the development that they reach in Malaysia.
Oh, okay. The question is especially about preference shares, the position of preference shares.
Okay,
If any jurisdiction allowing.
I'm not really aware anymore.
For me also, I only know about SC Malaysia, and we have to mention, highlight here that Malaysia is leader when it comes to Islamic stock market and also Islamic capital market. Well, another question, how the Islamic capital market, including Islamic equity market from the Islamic market microstructure mode? I didn't understand the question, Dr. Basheer, did you?
1 minute, I was
Question from Samsul Idul Adha.
okay.
I think we can skip the question. We can move to the
Okay.
next.
Okay, is there any limitation of time? Can we go through all questions or should we?
No, just like not necessary to go through all questions. Just have a look at the question.
Whatever we can
We
actually.
can move, yeah.
So
Always you can skip any question that you see which is actually not relevant to the topic today or which is extremely wide. I think the next one is which type of riba is allowed. So you can choose whichever you want to answer, whichever you don't want to answer, and we will deal with it separately.
Okay, so there is question from Asanda, who is asking, what type of riba is allowed in the Islamic stock? Riba al-Nasiya or riba al-Fadl? None of them are allowed.
Exactly.
Riba al-Fadl or riba al-Nasiya, none of them are allowed, but there is kind of tolerance point. We have tolerance barrier, which is 33%. And when we are talking about riba in conventional system, in today's system, we are referring to riba al-Nasiya, okay, or something similar to riba al-Jahiliya. I hope I answer your question. How is hotels considered Sharia non-compliant? I answered this during the training. Now we'll have another question. This one is a very good question from AKM Mizanur Rahman, asking, can you provide the Sharia logic? This was very good behind these benchmarks. Dr. Basheer, would you like to answer?
Dr. Basheer.
About
Since Dr. Kamola actually discussed this part, I think she will give a more comprehensive answer.
Okay, I will answer the question. What is Sharia logic? It's a very good question. So the participant is asking what is the lead, right? Or what's the source from where we are getting these benchmarks, 5% and 30%. Well, I will start with the 5%. 5% is coming from Gabin or uncertainty in prices. So when we talk about Gabin, like slight Gabin is permissible. Like when you look to the, especially during the Ottoman period, there was some restrictions on price increment for ribawi items or commodities, which was 5%. You cannot, you cannot increase the prices more than 5%. And then we have also, when it comes to buildings and something like that, it is 15%. So it's a 5% benchmark is coming from there. When it comes to the 33%, actually there is hadith narrated, hadith from there is story of which happened during
sorry, is it about the
inheritance?
Inheritance, yeah. Like he would like to make wasiya, the will.
Yeah.
So he asked the percentage. The Prophet said the third, and the third is الثلث والثلث كثير, and the third is like too much. So is it this?
That hadith.
Yeah.
Okay, in this hadith, someone rich, the rich person coming to our Prophet ﷺ, and he's saying that he wants to donate all the inheritance, and he has only one daughter. He wants to donate all his money right away. Our Prophet said, no, you cannot do that. So he's asking, how about half? The Prophet said, no. And the third question was, how about 1/3? And Prophet said, 1/3 is still more. It's still a big part. And at the end, he will say it's better to keep your heirs rich, to leave your heirs rich. So this hadith is dalil under the to justify the 33%. How it is connected to this? I was asking also this question a lot when I was taking my Islamic capital market course, and the answer is anything below 1/3. Since Prophet said that 1/3 is bigger part, then anything below 1/3 means less. And actually, there is a lot of you can read. There is very nice articles explaining the logic behind that. And in some cases, we consider if majority is halal business or anything. Some scholars say that if minority is non-halal and majority is halal, then we consider the commodity or whatever of the business as halal. So this is a justification or dalil. This is hadith, which serves as a dalil behind 3%.
And one more thing, sorry, Dr. Kamola. Actually, all what we are talking about here is simply because we don't have a pure Islamic system or Islamic markets. What we have actually is dual system, where conventional markets is way more developed than Islamic market, and everything dominant by the conventional market. So this is why, as actually Dr. Kamola mentioned earlier during the discussion, so she said all these actually because we have dual system. But if let's say we have 100% system, this will not have this type of issues actually.
Okay, thank you.
I think some of the questions, if we don't have the answers immediately available, we can send it to them later, or maybe we can cover in some next programs as well.
We will actually, yeah, it's a good idea.
Yeah, I think this takes care of most of the questions. There is I think that is a question relating to Dr. Basheer. He's asking, there is Bodhiman Indrajaya is asking, Dr. Basheer, is there any special method formula in terms of Sharia to count required rate of return and capital asset pricing model?
Sorry, what is the question? Who asked to read the question again?
The name of the participant who has asked the question is Bodhiman Indrajaya.
Okay.
The question is there any special method formula in terms of Sharia to count required rate of return and capital asset pricing model?
Okay. Again,
and he's also asking, you can answer both the questions together.
Sure.
So asking when growth value is more higher than required rate of return, this dividend valuation model cannot be counted or become. Okay, you answer the first one, yeah.
Okay, definitely, if the growth rate is equal to required rate of return, it will be divided by 0. So we cannot do that. And usually, why we have more, we don't expect actually growth rate to be exceed that the required rate of return, simply because required rate of return, what as an investor required, because he wants first of all to what we call it in conventional finance, the risk-free rate, what is the treasury bills pay, plus what is actually premium we have in terms of risk. So premium, the risk plus the free risk rate. This is as an investor we call it required free rate. Now growth, it will be no way to find the growth actually more than this, unless in kind of gambling, maybe we can this type of growth. But in terms of investment, we will not have this. So this is one thing. Another, in terms of the first part of the question, sorry, I'm just
Can you
going.
see the question, or should I read it for
No,
you?
no, I missed it. I just want to read it again. So
Doctor, he asked, is there any special method or formula in terms
oh
of?
yes, yes. Okay. In terms of any special model, as we said like earlier, the Islamic in terms of calculation, the Islamic finance in general is still in its infancy. Like all these much valuation processes based on the conventional way of valuation. So we rely on all these the conventional way. Now the conventional way, what they have actually, they call it interest rate. Actually, we replace it in Islamic finance as what we call it as a required rate of return instead of, for example, the interest rate. So I hope I answered his question.
Thank you very much. I think with this we conclude the question and answer session. Let me do some announcement. Let me switch on my camera so that you can see me as well. Thank you very much, Dr. Kamola. Thank you very much, Dr. Basheer. Thank you very much all for participating in today's session. It was a great session with great attendance. I will now try to maybe talk to, firstly, like special thanks to the students of USAID in Istanbul, Sabah, Atin, Zaim University, especially the Club of Islamic Economics and Finance and Club of International Students. Basically, this was their program, and we were the ones, TAIF and both our learned scholars. Actually, we facilitated and we supported them in this program. So I will try to thank them something in Turkish. Forgive me for my wrong pronunciation. Teşekkürler. Çok mutlu etkilendik. Birlikte daha çok program yapacağız. Sayın özel enderi melerimiz var. I don't
Dr. Kamola, this is correct, right?
Correct. I believe students understood how much their effort is appreciated. This is most important, sir.
know.
And
Thank
I would
you.
like to thank them for their really efforts. Shukran jazilan.
Yeah. Teşekkürler. Çok mutlu Let me try one more time. Dr. Kamola, you can correct me where I'm wrong. So I want to thank
Everything
him.
is right. Everything is right.
Teşekkürler is correct, I think. Çok
Yes.
mutlu etkilendik.
Yeah, çok mutlu olduk ve etkilendik.
Yeah, thank you. We are happy and impressed.
Yes.
Birlikte daha çok program yapacağız.
This is perfect.
Sayın özel endere melerimiz var.
Okay, this one I didn't understand.
We have some special discounts for you. What do you say it in Turkish?
Again, what was in English?
We have some special discounts for you.
Oh, okay. We have some special discounts for you. Sizin için özel indirimlerimiz var. Okay.
Was,
Okay. And thank you very much for this active student.
Very Ms. Wow. That's right.
İndirim, yeah. Discount is indirim.
In there. Okay. Thank you. Thank you very much. So
Thank you very much, guys. And I really appreciate all your efforts from starting on LinkedIn, in groups. I saw you everywhere. Thank you, and inshallah, we will meet again.
Çok teşekkür ederim.
Thank you
Thanks a
so
lot.
much for
thank you,
everything, Dr. Kamola and Dr. Basheer.
And you are always the hidden soldiers. Actually, the reason of
Yeah, no,
success.
thank you.
Many
Thank you.
programs.
Tashakkarlash. And like for
You're
the
welcome. Thank you.
Students Union and for your students of the university, we offered them like 3 free courses earlier, but I'm so happy and we really feel so proud to work with you. We are increasing this free courses to 10 courses now, so you can do a draw of the participants of this program. They can choose any of the program that we have irrespective of the price, and that will be completely free for the students of the university. For other participants who are not the students of the university, we are offering, and who have attended this program, this amazing program, we are offering, like if you send an email to contact@taiflearning.com and say that you participated in this program, we will give you 50% discount. This is like for 2 days from now. So if you send an email and then tell us that you participated in this program, we'll give you a 50% discount on any of the course that you will choose. So I hope this will facilitate the students, especially in actually subscribing to different courses. And inshallah, as I mentioned earlier, we will be doing more and more courses together. Berlekte daha çok program yapacağız.
Inshallah.
Inshallah. Thank you.
Inshallah. That was very perfect Turkche in the end, inshallah.
Okay. So, Dr. Kamola, your concluding remarks before we conclude, or any of the colleague from
We
the
have a coming
university?
course with Dr. Kamola also, Ziavi.
Sorry?
Inshallah, we are having a course with Dr. Kamola soon also.
Yes,
Really?
inshallah. There are many other courses coming. There are many courses coming, and one of them, inshallah, will be with Dr. Kamola, and we will involve Dr. Basheer also. This was his first program with us. Inshallah, we will involve him as well. Sister Asma, or anyone from the university, if you want to say anything, you are most welcome. We can. I see Somaira or.
Yeah, Somera, I think, Somera.
Yes, I am here. Thank you so much for being with us, Dr. Kamola and Dr. Basheer and Mr. Zia, also Mr. Ahsan. Thank you all of everything, and thank you for being with us. Also the Club of International Students. That's it, and the participations. Thank you so much.
We'd like to thank your effort as well.
Thank you so much.
Yeah, thank you very
Sizlere
much.
çok teşekkür ediyorum hocalarım. Sayın Doktor Kamola and Dr. Basheer, Mr. Zia, Mr. Ahsan. Sizleri çok teşekkür ediyorum.
Biz teşekkür ediyoruz arkadaşlar.
Ziavi, these are the presidents of the club, both of them.
Okay, player. Thank you. Tashakkurlash.
Çok teşekkür
Rica ederim.
ederiz.
Okay, so this Dr. Kamola, unless you have anything to say, we conclude this session.
I want to thank, of course, all the participants who were today with us. Thanks for your time. Thanks for your questions. And inshallah, we will have another session where we will try to answer, to go through all questions. But in generally, thank you so much for your interest. I have special thanks to Student Society, having been like one of the members of Student Society in my past. I know how much effort and enthusiasm, like Dr. Basheer said, they are hidden soldiers. Thank you so much, guys, for all your effort, volunteer effort. It means a lot, and I wish all the best in your career. Of course, I want to thank TAIF for organizing these trainings, which is very important, and it's kind of very valuable for me contribution to Islamic finance. To education of Islamic finance. And of course, I want to also thank my colleague, Dr. Basheer, for his contribution. Thank you, everyone. And inshallah, see you soon in coming trainings. Assalamu alaikum wa rahmatullahi wa barakatuh.
I would like to add one more thing. Actually, the same. I would like to thank the participants, and I hope we added something for them. And as we said, this is an introductory level, so maybe there is later it will be a specialized topic within even Islamic stock market. And definitely I will thank the panelists. Always there is people will hold things and they will contribute many things which is our backstage. The panelists, I would like to thank every one of them, and definitely for TAIF. This is my first time with the TAIF, and this is I appreciate this what you said about free training. This is kind of social pay for the community. You show that you have a social responsibility and you are actually caring about students, and this is really a good initiative, and we would really encourage other institutions to do so. So I would like to thank TAIF, Mr. Zia and Mr. Hassan for their organization for the event, and of course, last I would like to thank Dr. Kamola and for her contribution always. Thank you so much.
Thank you very much, Basheer. Thank you very much all, and especially the students. My message to you is that TAIF is for you, and we need you to be more proactive and more active in TAIF activities. Dr. Kamola and Dr. Basheer are young, but like people like me, we have done our part, and this is your time to actually follow and take lead. So we would like you to be more and more involved into the activities of TAIF and give your suggestion, advice, guidance, and we would be pleased and happy to involve you here. May Allah bless us all. Thank you very much. This brings this session to an end. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam.
Aleykümselam hocalarım.
Teşekkürler.
Rica ederim.